Joining me now is Brendan Ahern. He is the Chief Investment Officer. Brendan, I mean, it's just been going from bad to worse. And this is at a time when the macro guests on China have been saying they're turning a corner. The tech crackdown is over. This is the time to get in. I mean, you can at least feel comfortable maybe buying alongside Charlie Munger, but this seems to have come out of nowhere.
Well, it shouldn't be a surprise that since the passage and signing of the Holding Foreign Companies Accountable Act, we at KraneShares have taken this very deadly serious. We've started to convert. We've moved KWeb. We've moved a significant portion of our U.S. ADRs, converted them into the Hong Kong share classes in anticipation that the SEC will fulfill its obligation as the enforcement agent for the Holding Foreign Companies Accountable Act. And clearly there's market participants who haven't taken that very seriously or were unaware of it, are unaware of ADR conversion. And so we're seeing this horrific indiscriminate selling of U.S.-listed Chinese ADRs on the specter of ADR delisting in 2024.
Right, but you guys have been doing this for some time, haven't you? I thought we discussed this for a long time.
Oh yeah. I mean, certainly, since when this was a bill, we've been spending a lot of time on protecting our shareholders. And so, a year ago, Kelly, KWeb was only 25% Hong Kong. Today, it's 66% Hong Kong. And by the end of this year, if not significantly sooner, we will have completely removed U.S. ADRs out of KWeb. And we highly recommend investors find out about ADR conversion, about doing this transition that we've been doing on behalf of our shareholders in KWeb.
Sure. I guess the reason why I just want to scratch a little below the surface here is this was a known to you. It's about converting, okay, from U.S. ADRs to Hong Kong. Fine. So why is the Hong Kong market itself doing so poorly right now? The Hong Kong market is at a 5-year low. We've seen what's happening with COVID cases in Hong Kong, and now there's some concerns about that having similar effect in China. I guess my point is I'm just not totally convinced that this indiscriminate selling it may be catalyzed by this issue, but it doesn't seem to be fully explaining the behavior of Hong Kong and Chinese stocks right now.
Well, we've seen a significant disparity over the last year between the fundamentals of the companies and the price action. And so foreign investors who really reflect their opinion of China and China's economy through Hong Kong and U.S. shares have been very negative. We can contrast that with what do investors in China think about China? So the Shanghai and Shenzhen composite were up 9% and 13% last year. So you have this incredible disparity between what the Chinese think about China and what foreigners think about China. And so some of this, it could be U.S.-China political relations. It could be China internet regulation. It could be tax loss selling in the individual names, as we saw in November and December. The culmination, the sum of all fears, is really reflected in the U.S. and Hong Kong names. We can contrast that with the A-share market, the Shanghai, Shenzhen. If you just do KBA versus KWeb, you can see that disparity.
Sure, and absolutely that's going on. Would you say, though, that there's no larger macro concern here as it relates to what's about to happen with the Hong Kong or Chinese economy?
Well, we think China's economy is getting ready to ease as the world is on the precipice of tightening. So I think this is a little bit like, listen, we could argue all day why why people should be buyers and not sellers, but the price action is what it is. There's certainly behind the scenes, if you do some homework, you'd see that China is easing monetarily, fiscal support, and I think hopefully, I think China has a real strong incentive to helping find a peaceful resolution in Hong Kong due to their importation of Ukrainian wheat and certainly natural resources on the Russia side.
Quick final question. Why does a name like Tencent jump out to you as one that's oversold here?
Well, certainly investors in mainland China, they've been buyers of Tencent. We can track that through the Hong Kong Stock Exchange, through the Southbound Stock Connect. They've been buyers of Tencent stock over the last 2 weeks on this weakness. And if they're buyers, that's usually a very good sign. They're buying Tencent, Meituan, and Kuaishou, those three in particular today.
All right. Brendan, thank you for your time today. Thanks for joining us. Brendan Ahern with KraneShares.